begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Wednesday morning, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, good morning. Prashant, all hopes on you. Yesterday, the amount of news flow from the US market, Trump speaking, Lutnick speaking, I think everybody was speaking. At some point, there was obviously the Besant commentary as well. I gave up. But I think at the end of it all, it's good news, right? So that's what matters.
So, bolte hain, Saransh kya hai? Saransh is all one thing, which is that India is first in line to get a deal.
Deal ho rahi hai.
That's the one thing.
So that's good
By the
news.
way, they were all speaking because Trump has completed 100 days.
Indeed.
Yeah.
So it's 100 days of Trump, and I think...
And lowest ratings ever, I think,
Only
of a
100
US
days
president.
and a few more years to go. So, get used to that roller coaster ride. And, overnight, besides all the talk on trade and the tariffs, he also said that maybe he knows a thing or two more than Powell on interest rates. So not stopping short of any kind of action.
Yeah, there was this as well.
Yeah,
Knows more than the Fed chief. Nice.
On interest rates.
Let's just quickly take it from the top then in terms of what you need to know as we begin a fresh new trading session. So I'll just sort of quickly wrap up all the comments which came through from the Commerce Secretary, the Treasury Secretary, and of course the President himself on the India-US bit, right? So President Trump said that trade talks with India were, and I quote, coming along great. So that's coming in from the President himself. Then you had the US Treasury Secretary who said that US and India are close to a deal. He basically said this, that is Scott Bessent, he said this because tariffs in India were so high, I mean, they're so stark, and non-tariff barriers, which are much harder to deal with, they are low. So in that sense, I mean, India is kind of a deal is pretty close. Now, Commerce Secretary Lutnick essentially said that have reached, and this was interesting, he said, have reached a trade deal with an unnamed country. And he said that, and the quote was, I have a deal done, but I need to wait for the Prime Minister and the Parliament to give its approval, which I expect shortly. These are comments which I think the market read very clearly to mean that this is essentially coming through for India. This is the Commerce Secretary, not the Treasury Secretary, who made these comments. But let's sort of rewind the clock back a little bit more and look at what the US markets did. So equity indices up for the sixth trading session. The S&P up about 0.6, the Nasdaq up about 0.5%. The 10-year was down about 4 basis points, 4.17. That yield, that is. Oil prices, another 3% cut, by the way. This is $64 on oil. And more, I mean, what's the reason behind these drop in oil prices? You've got to sort of, it depends on who you ask. The most kind of widely talked about explanation is the fact that maybe the US has kind of left the talks with China on the side. And they're sort of working with 15 to 17 other countries to arrive at trade deals. But the point is, for global demand, what matters, of course, is a US-China deal which is nowhere in sight. So oil taking a bit of a sort of, a move lower. There was some data as well. Trump, of course, signed an executive order easing the impact of his auto tariffs. Actually, there were two orders which came through with regards to auto, but there is some easing which has been done. So essentially to avoid stacking of tariffs on steel and aluminum on top of each other. So in terms of data, Joel's job openings is unexpectedly missed expectations. The April consumer confidence dropped to its lowest level since the COVID-19 pandemic. And all of this will have an impact when we get, the GDP numbers, which is later today. So tonight, you'll get the ADP the private employment figure, the first quarter GDP and consumption data, PCE, etc. as well. So all important. But I think, will all of this really show the impact of tariffs, etc.? Because this is slightly all backward looking. So will be the jobs data, which we will get on Friday. And that is the reason why the PMI numbers are being watched more than anything else. Big earnings later today, you have Microsoft and Meta, which will report numbers. And I think we'll need to watch those as well. So, yesterday the market here, just to come to levels, ended absolutely flat. We've had a pretty good run. Monday was super strong. Yesterday was flattish, although mid and small caps did better than Nifty and Bank Nifty. And so the levels don't really change. The upside level is still the 61.8% retracement of the entire fall, 24,546. Support comes in at about 23,850. The Nifty Bank upside level is the same range which we've been putting out for the last few days, 56.98 to 56.631. And the downside level is Friday's low, 54,176 is an important downside level. GIFT Nifty will come up on your screen. Should give you a quick sense of how we're likely to start. About 90 points lower on the GIFT Nifty. Remember, a lot of what we heard with regards to US-India, I mean, I didn't find anything really new except to maybe, hammer in the point of urgency that, the fact that we have a deal with an unnamed country seems to suggest that, well, something is done, at least a MOU, the contours, the framework deal is done. The actual nitty-gritties of the deal, I think that may still take time, as I think we've discussed many times in the past. Surabhi.
Yeah, absolutely. But for what it's worth, there's a deal happening, but what those specific tariff lines are going to be and how much lower than 26% will the eventual numbers be, that we need to see. Anyway, markets across Asia, lots and lots of domestic news flow as well as lots of news flow across Asia. Markets in the region are a little somber, very range-bound. We're not seeing outsized gains, flip-flopping around the flat line today, a little bit of red, a little bit of green out here. And the reason for the caution is twofold. One is that the Bank of Japan has started its policy meeting. It's a two-day meeting which is kickstarted today. The street expects no change at least in the interest rates. They will be left unchanged at 0.5%. That's the basic assumption. But let's see if the BOJ has something in store given the uncertainty around trade. Japan, by the way, is the other country apart from India. So Japan, India and South Korea are seen as the first in line to get that deal with the US. There's data out of China as well, and that data is telling us that this whole trade conflict is indeed beginning to bite. Because look at that number, the manufacturing inputs from China not looking too good. Manufacturing activity, this is the official PMI, the Chinese official PMI that's come in. It has slipped into contraction territory. 49 is the reading for April. The expectation was around 49.8, so it's a little lower than expected. That's on the manufacturing side. Now let's come to the Indian market. What we have seen is actually a very, very good April, given all the ferocious headlines, the volatility. 5% up, that's the Nifty in the last 1 month or so. However, now in the last 1 or 2 sessions, what we're seeing is that the Nifty is getting into a bit of a congestion patch. Even yesterday, we had good cues coming through, strong institutional flows, but it's unable to really take out this zone of 24,400 decisively. That's become a bit of a congestion patch. Yesterday's flows numbers are on your screen, and they look pretty good once again. FII is buying in almost 2,400 crores in the cash market, about 1,400 crores coming in from the domestic institutions, so no problems there. So let's see if the Nifty can punch through this slight resistance level or not. Now let's come to the news flow, and there is tons of it domestically. Just some thoughts on the table. Bajaj Finance, of course, we'll analyze the numbers, which look pretty okay, quite stable. More importantly, there is a stock split and there is a bonus issue. Stock split is for every 1 share. Now you'll have 2 shares of Bajaj Finance. So that usually perks up retail demand. And there's a bonus issue, 4 shares for every 1 share is held. So watch out for this. SBI is looking at raising equity capital after quite some time. There's a board meeting on the 3rd of May, and they're looking to raise equity via either an FPO, rights issue, etc., or even a QIP. That's in focus. And IndusInd Bank is going to be a watch point. Now, Mr. Katpalia has resigned. You can argue that's fine. That was coming. It was always known. But when we spoke to Mr. Katpalia in the on-air interactions earlier, he had indicated that he will sort of, see the bank through this period and then, complete his term. That's not happened. The resignation is immediate. And he says, and I quote, if we have the quote, we should have actually put that up. I take moral responsibility for various acts of commission and omission. That's what he is saying. The bank has now sought the RBI's nod to form a committee which will carry on the responsibilities and the duties of the MD and CEO in the interim. So there is a leadership void suddenly at IndusInd Bank. Let's see how the stock reacts to that. And last but not the least, also watching the geopolitical situation. Yesterday, there was a very high-level meeting with the Prime Minister. The Defense Minister was there, NSA, the Chief of Defense Staff, and all the Chief of all the Army staffs. They were all there. And the Prime Minister has said that the armed forces have complete freedom now to decide on the mode, on the targets, and the timing of the response. So this uncertainty continues to loom as well. So lots of cues to digest this morning. Nigel. Well,
that's right. And add to those cues, that's Akshay Tritiya as well today. So happy Akshay Tritiya to all those gold watchers as well. Well, let's focus on the top cues for the day. Well, the top one is going to be about India and the United States. There's a possible deal in the offing. We'll have to keep an eye out on that. Besides that, all eyes on the border as well. And the street is waiting by. There has to be some action on the border. and that could play out in the next few days. So that's why there are select participants in the market that have raised some cash for this event, because normally you get a knee-jerk reaction and then in fact the market moves on. So that's the second point. And the third point is today is Nifty weekly expiry. So those are the top factors that we're tracking for the day itself. Well, moving to what the FIs did in yesterday's trading session, they're adding more longs than shorts, and that's precisely what played out yesterday as well. So you have the short positioning that's added around 56%. That's at a multi-month low. Even if you look at it in absolute terms, the net short positions at around 20,000 contracts ballpark, well, that's at a multi-month low out there. Even the client positioning has moved into the net short positions by close to around 20,000 contracts or thereabouts. Well, moving to what went on yesterday, besides the cash market action, there appears there was some unwinding of positions on the Nifty Bank. We've been making this point that the RSI, which is one of those crucial indicators that you track, relative strength index, that has been holding around that 70-odd mark. It cooled off a little bit, but it's still at around that 70-odd mark, which technically suggests that it was a bit of an overbought zone. So there was some unwinding of longs on the Nifty Bank in trade yesterday. The options data should come up, and it's going to be important because today is the weekly expiry. So 24,400 call, 24,500 call, both of them were fairly active in yesterday's trading session. But on the downside, you have this 24,300 put that added a good amount of open interest, and the premium was around 50 rupees or thereabouts. So that brings us to the levels. Now, the last few trading sessions, numerous times you have gone to 24,350 to around this 24,450. Last 5 sessions, we have continuously been going to that range, and in fact, that range has been getting rejected. So this becomes a crucial resistance then. 24,450, 24,500. The bears, they want to defend this mark. On the downside, going by the options data, we're going to be starting off closer to this mark. But that should be the level that you want to defend on the closing basis. 24,200, and you do want the index, the Nifty, to trade below that mark for a longer period of time during the course of the day. Otherwise, the bulls will see some kind of unwinding of position. So we'll keep an eye out on that. The Nifty Bank, for the last many trading sessions, I've been making this point, 56,000 mark. That's a crucial mark. That's a crucial resistance zone. And just look at it. In the last few days, quite a few times we visited that mark, but we're unable to conquer that mark on a closing basis. So this is the important mark that the bulls will be tracking very closely. For starters, we start off in the red, but we're going to be starting closer to around the 24,200 odd mark. On a closing basis, you'll want to defend this mark.
Well, a lot to do and a lot to track in terms of specific stocks, in terms of the broader market, and we'll continue to do that. Nigel, thanks very much for that. So let's just play out some of those sound bites, right? Trump, with regards to what he said, Scott Bessent, the U.S. Treasury Secretary, and of course, Commerce Secretary Howard Lutnick as well. Listen in.
India's coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens.
India, in a funny way, is easier to negotiate with than many other countries because they have very high tariffs and lots of tariffs. So it's much easier to confront the direct tariffs when, as we go through these unfair trade deals that have been put in over decades, that the non-tariff trade barriers can be much more insidious and also harder to detect. So a country like India, which has the posted and ready tariffs, it's much easier to negotiate with them. So I think the India negotiations are moving well.
Every country in the world, just like Donald Trump has said, who wants to do a deal with us. Now, here's the point. I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval. And then there are country after country where we're just working through the details. But you have to remember, they have prime ministers, they have parliament, they have to work through their process. But all of these are going to be coming. And what they're going to be is they're going to be incredibly smart, incredibly thoughtful. They're going to unleash the ability for us to export to them to grow. And they are going to also protect our industry so we can grow. And I think our GDP is going to pop from there.
Well, a deal is coming, and pretty as clear as it can get. But of course, Lutnick did not name the country in question. John Stolfutz is Managing Director and Chief Investment Strategist at Oppenheimer Asset Management. John, good to have you with us here. Thanks very much. Looks like at least a framework deal should be announced whenever earliest possible. That seems to be the indication from everyone in the Trump administration with India. What do you make of it, John, and what will it mean for India? Because, I mean, it's widely acknowledged here, that the impact because of these tariffs to the Indian economy is not that large because we're not a big exporting nation to the US. But the impact is indirect through global markets, etc. So we get a deal, but I mean, there's this. Does it clarify things a lot for investors here, stocks here? What's your sense?
Well, we'd have to think, first of all, thanks for having me on the show. It's great to be with you, especially in these times. Would have to say this, I think what we really need to look, what's the real goal here? And a lot of that has to do with the diversification of the global supply chain, with India likely a major beneficiary of it. So I think in terms of, for India, there's opportunity here. The clarity that was expressed, at least in the point of the view of the administration in the States from Besant, is that it's much clearer what the negotiation points are with. I think it's up to Prime Minister Modi and his team in the meetings that they have with the U.S. and Trump administration. I think is what we'll see. So I'm waiting eagerly to hear how these things work out. But we are very big believers that this is not the end of globalization, but rather is re-globalization away from a one-country-centric global supply chain. And we think it will benefit countries large and small, both developed and emerging in the process. We do, by the way, though, are wary of high tariffs. We're not exactly great fans of tariffs, but we do realize that the administration, at least from the president's perspective, sees it as a negotiating point. We wish it could be done another way, which would be less worrisome to what we've seen earlier to the markets.
Hi, John. That's an interesting point, that this is not the end of globalization. In ways, it's re-globalization. That's an interesting way to look at it as we see those supply chains shift. So as we're dealing with this flux, because it's going to take a while, right? I mean, deals with which countries, where are these trade flows going, where does manufacturing shift? As all this happens, in terms of the equity call, where do you see the U.S. market itself?
Well, the U.S.
Yeah, sure. Carry on. Yeah.
Great question. The U.S. market, it's interesting to note, from the start of the year until February 19th, was up about 4.46%. And then it took a spill where it was down almost 19%. A lot of that on worries related to what would happen in terms of these tariffs. It was after the April 2nd tariffs. A lot of people expected tariffs would be much milder or would be much more exemplary of what might happen, but not so drastic. And then since then, we've seen the S&P 500 rally 11%. And if we look at the sectors that have really done well in here since the bottom so far that we saw, which was on April 8th, the S&P is up 11.6%. Information technology, I mean, I find this hard to believe, is up 16.4% from its low. Consumer discretionary is up 12.7. I'm looking at a Bloomberg terminal here. Materials up 12.27. Industrials up 11.87%. And I won't belabor what the rest are. But if you look at that and Q1 earnings results, which show a number of key sectors, including technology, consumer discretionary, and healthcare, a double-digit earnings growth with only 3 sectors negative a double-digit earnings growth, and those, as I recall, are materials, energy, and the third one at this hour of the night in New York fails me. But my point is, it looks like the market is telling us a great place to be is not joyously optimistic, but certainly constructive on the market. And looking to see where the most damage was done, which is likely where some of the best performance will be in aggregate coming out of this.
So you don't see a major dip. You don't sound too concerned about U.S. equities. That would be the right way of looking at it, right?
Well, the thing is, really, I think that in terms of from observers of this market, I think this was very much, at least in sentiment, was similar to what we saw at times during 2022, when a negative outlook is what really brought the market down, because most of what was predicted by the bears in 2022, a recession, didn't happen. Drastic drops in employment didn't happen. The economy didn't fall apart. All of this stuff, what it was remarkable sentiment that was generated from communities within market participants in the States. And it was bought until about October of 2022. And that's when the rally began. The bears still thought there was going to be a recession in 23 and 24. Didn't happen. And the Fed has done a great job, we believe, in that it raised rates 11 times from March of 22. And then it went on to 9 pauses, and then began 3 cuts without a recession. And we think a combination of the Fed and hopefully a lessening in the extreme nature of the tariffs and the negotiations will enable a rally here that will be sustainable and economic growth, that if at a modest pace, as we go through the first hit of the tariffs, will be remarkably sustainable.
Sure.
All right, John, appreciate you staying up late for us. But very quickly, if you could tell us, where does India feature in the list? Because if you're talking about the month of April, it's actually belonged to the Indian markets. We have been relative outperformers. FPI flows into India are positive, while other emerging markets haven't seen positive flows. So we believe we're in good space. What's your take? Where does India come in the pecking order?
Well, we certainly are very pleased with it, because we have, when in our view of this reglobalization, we see countries that include India, Korea, Japan, that's South Korea, Japan, Mexico, and a variety of other countries across the board will likely do very well from this. And India, because of the scale, size, and the sophistication that it has proven in various areas related to technology, related to medicine and logistical systems and things. This is a real big story, and we think this is still very early in the story, and it's a nice rebound from a period where, like the U.S. markets, it experienced a retracement of significant advancement, and now it's coming back nicely.
John, it's a pleasure. Thank you very much once again for being here with us here on CNBC TV18. Well, let me just quickly run you through what's lined up here in the next 2 hours or so. So you'll hear from N. Jayakumar of Prime Securities at 8:35. We talk markets. We have Jyoti Gupta of Nirmal Bang Institutional Equities Research. We talk about defense there. Stocks, of course, rallied hard yesterday. The index was up 5%, 920. You'll hear from Manish Sodalia on markets in the road ahead, 9:30. This management is see it with us in the fourth quarter numbers. We have Sachin Raole of Praj Industries speaking to us at 9:40. A little later at 9:50, G. Shivkumar of G Shipping will speak with us about the impact of tariffs in the shipping industry. And of course, it's the economy at 10:15. And Lata will be in conversation with the analyst at JP Morgan on how tariff wars will impact growth currencies and commodities.
Well, slip into a short break. Come back. We focus on all the top 10 stocks that we're tracking for you. We're looking at BPCL, Vishal Mega Mart, Star Health, Shuffler India, as well as India Mart Internivesh. That's India Mart that we're looking at. All of them positive news flow. On the flip side, IndusInd Bank, Bajaj Finance, Bajaj Finserv, 5-Star, as well as Praj Industries will be reacting to negative news flow. Slip into that break, come back. We'll get into further detail on all of these names.
Welcome back. So let's just take stock of cues across Asia once again. Those markets are very, very mixed. Last I checked, it was just around the flat line, and not much has changed till now. The Hong Kong market is actually slightly lower. Yeah, there we go, 30, 40 points on the lower side. So very quiet across Asia. Let's bring up the implied open. For us, obviously, the geopolitical angle becomes an additional watch point, and maybe that's why 98 down. Remember, there was this meeting, very high-level meeting, Prime Minister, Defense Minister, Chief of Defense Staff, NSA, everyone was there last evening, so it's a wait and watch. Anyhow, lots of stocks to track as well, as we're looking at all the market news flow this morning, and our team is standing by with the CNBC TV18 list of top stocks to watch. Guys, good morning to all of you. Lots of numbers. So, Abhishek, let's start with Bajaj Finance and Finserv.
begin with Bajaj Finance. The numbers were slightly below our poll. However, the key has been that the guidance for FY26 is lower than FY25. So take a look at the NI and PAT. They are below our poll. They have also announced stock split of 1:2, bonus shares of 4:1 ratio. And now FY26 guidance, they have guided for 14 to 16 million customers addition. This compares to 18.2 million customer addition that they had in FY24. AUM growth rate to be at about 24 to 25%. This is lower than their long-term guidance of 25 to 27%. Net interest margin to remain stable in FY26. They expect the cost of funds to decline by 10 to 15 basis points, YOY. Fees and charges will grow at 13 to 15%. This is lower than the AUM growth guidance. Credit cost to be in the range of 1.85 to 1.95%. Last time they had guided for around 1.85 to credit cost, but they have overshot it. And for FY24, the credit cost has come in nearly at 2% X of one-off pools that they have created. So ROA guidance has been lowered down to 4.4 to 4.6%. Earlier guidance was about 4.6 to 4.8%. And ROE guidance has also been trimmed down to 19 to 20% range versus the 21 to 23% that they had earlier. In terms of Bajaj Finserv, the basic was our general insurance business that disappointed. The total premium declined by nearly 10% YOY and about 27% sequentially. The gross written premium in that was down nearly 13% YOY and around 35% sequentially. The claim ratio is the heartening point to see. That's improved to 62.9 versus 77.7% in the previous quarter. PAT came down by 4.5% YOY and about more than 9% sequentially. With respect to the life insurance business, that saw a good momentum on a sequential basis. So the gross written premium and the renewal premium were up 45% and 51% quarter on quarter respectively. However, the PAT declined by 61.3% YOY and about 81.5% on a sequential basis. Back to you.
All right, Abhishek, thank you very much for that. So that's a comprehensive look at the numbers from the Bajaj companies. Let's talk about BPCL, which reported numbers as well. Suraj here with details. Good morning.
Morning, Prashant. So surprisingly, it's reported a very strong set of earnings led by refining segment. It's likely that both its major refineries, that's Kochi and Mumbai refineries, have seen normalization after the planned shutdown that these two refineries had seen in Q3 of FY25. Even marketing segment was aided by the inventory gains. Now coming to the headline numbers, while revenue was down 2%, but it's almost in line with the estimate of rupees 1.14 lakh crore. EBITDA was up 2.4% and has come in at rupees 7,765 crore against our poll of 5,260 crore. Margin has improved to 7% against our poll of 4.6% and against 6.7% that company reported in the last quarter. Now coming to GRM. It has seen a sharp improvement in GRM, and as I said, because of normalization in two major refineries, the reported GRM has come at $9.20 per barrel against our expectation of $5.60 per barrel. Also, it has seen an improvement on a sequential basis. Now, inventory gains that company has reported was of rupees 520 crore and Citi was expecting of around rupees 50 crore. Now, all the eyes regarding OMCs would be on LPG compensation amount.
Okay, all right. Thanks a lot for that, sir. Well, let's hop across to Mangalam. He's here. He's tracking Vishal Mega Mart. Morning, Mangalam.
Good morning. So good numbers coming in for Vishal Mega Mart. If you look at the revenue growth at 23%, it's largely in line with the company's own historic trend of 24 to 26 odd %. But the margin expansion is something that really stands out. So, year on year, the revenue has grown 23%. The EBITDA, however, has grown 42%, margin expansion of 200 basis points. And the net profit has nearly doubled, an 88% growth coming in from 61 crores to 115 crores itself. What is it that led the growth? Revenue growth was led by same-store sales growth of around 13.7%. But importantly, margins expanded because of one, revenue from own brands came in at 73%. The number last year was 71%. Sales from apparel are close to 26.5% higher. So that's growing faster, and that's reflected in their gross margins as well, which from 26.5% have increased to 28.4%. So more sales from their own brands, higher sales of apparel have led to a bigger margin expansion than the revenue growth itself. So see the stock in the green today.
Okay, all right, got that. So Vishal Mega Mart, stupendous performance. And I was just remembering, actually, as a contrast, Shoppers Stop has had another rough quarter. So study in contrast, these two companies catering to obviously different segments. Got that, Mangalam. Thank you very much. Let's move on to the big news. IndusInd Bank, Mr. Katpalia has resigned from the post of MD and CEO. And Sudarshan, this is immediate, right? And they haven't even named a successor.
They have not named, they have just formed a committee. So first, there has been uncertainty around this bank because after Deputy CEO resigned just 2 days ago, now CEO has resigned. But talking about the stock, it's up 40% from the recent lows that it had hit on March 12 of rupees 606 per share. Now, company has announced that its CEO Sumant Katpalia has resigned effective 29th of April. And just 2 days ago, its Deputy CEO Arun Khurana had resigned. Now, RBI has formed committee of executives. It has named 2 people. First, Soumitra Sen, who is currently head of consumer banking, and the second member is Anil Rao, who is chief administrative officer. Now, these 2 members will be part of committee of executives, and committee of executives will work under the guidance of oversight committee of the board, and that oversight committee of the board will be chaired by the chairman, and currently Sunil Mehta is the chairman. Now, this committee will oversee the operations of the bank at least for 3 months or till the new MD and CEO takes charge. So just because of uncertainty around this bank, I'm going with red for today.
All right. So thank you very much for that. Well, 5-star business finance is the next one we want to focus on. Abhishek is here with details. Abhishek, morning.
Morning, Prashant. So to begin with, the business momentum has slowed down a bit and the asset quality has deteriorated for them, which doesn't augur well in Q4. So disbursements are up 55.2% on a sequential basis. AUM growth has fallen below the 25% year-on-year mark. It's coming at 23.2% YOY and about 6.25% sequentially. Asset quality has deteriorated. Gross NPA ratio has inched up to 1.8% versus 1.6% in the previous quarter. The NII growth is at 21.5% YOY and about 4.5% sequentially. However, elevated provisions have meant that the PAT has grown by almost 2% on a sequential basis. PAT has lacked the NII growth on account of elevated provisions. Back to you.
Okay, all right. Got it. Thanks very much for that, Abhishek. On to Star Health Insurance. Yash is joining in. Yash, how are the numbers?
Well, the numbers don't look good for Star Health Insurance in the fourth quarter. The premium growth, net earned premium, has grown at a decent pace of about 12%. The number that has come in here is about 3798 crore rupees. But operationally, the result seems to be really weak. Underwriting loss, that has increased 200% in the fourth quarter. The loss that has come in is 275 crore rupees versus a loss of 92 crore rupees. Operating profit and loss, the company is moved to loss of 87 crore rupees versus profit of 90 crore rupees. Combined ratio on a year-on-year basis has jumped by 642 basis points, coming in at about 99.19% versus 92.77%. PAT is just about 50 lakhs in the quarter as against 142 crore in the same quarter last year.
Okay, Yash, thanks for that. Well, let's hop across to Rima. She's here to tell us about India Mart. The stock was sensing, I think, good numbers, ended virtually at the high point yesterday. Rima?
Indeed, the stock was up more than 4% yesterday. Well, the numbers are not great, but they're not bad also. There are a few positives. So the top line growth is flat quarter on quarter, but year on year, there is a growth of about 12.8%. Margins have expanded year on year, but they're down on a quarter on quarter basis. And a higher other income has boosted the profitability of the company. So the profits have gone up by nearly 50%. But the problem for the company is their paying subscriber. That has been very anemic, and even this quarter, the growth is just 1%. The only silver lining is last quarter, the paying subscribers declined by 3,700. This quarter, they managed an addition. But it's still a far cry from the earlier run rate, which used to be about 4,000, 5,000 addition. This quarter, they're only at about 2,100. Collections on a consolidated basis have also picked up compared to the prior quarters at 11.8%. Back to you.
All right, Rima, thank you very much for that. Praj Industries and Schaeffler India in focus. Next, Vamakshi's got those. Vamakshi, morning.
Good morning, Prashant. Praj Industries reported a miss across the board. It was a weak set of numbers coming in from the company. When we look at the revenue, that saw a downtick of almost 16% on a year-on-year basis. The other expenses as well as the employee expenses, both of them saw an uptick of nearly 17%. And resultantly, the EBITDA margin came under pressure, down nearly 424 basis points. The EBITDA too came in nearly 43% lower. When you look at the net profit, that is coming at nearly 40 crores. This is a downtick of almost 57%. It's a miss across the board. But on the flip side, when you look at the order intake as well as the backlog, the order intake was up nearly 11.7%, while the order backlog was at 4,293 crores, an uptick of nearly 11%. So therefore, it seems like there was an execution-related issue, which caused the miss on the numbers. But apart from that, the company also made another announcement. They said that they've joined forces with ThyssenKrupp Uhde. Then together they will be working on end-to-end offering for PLA, that is polylactic acid production. So therefore, on the back of weak set of numbers, going with the red for Praj Industries. But apart from that, keep an eye out on Schaeffler India as well, going with the green for this counter, and that is mainly on account of an improvement in the margins. Let's look at the numbers then. Revenue saw an uptick of almost 16%. The margins have improved from 17.6% to 18.5%, and the net profit has come in nearly 14.5% higher.
Okay, all right. So Praj, not that great. Schaeffler seems to have done better. Vamakshi, thanks very much. Let's quickly recap our list of stocks to watch. The ones that have positive news flow or positive earnings are BPCL, Vishal Mega Mart, Star Health. Star Health actually on the lower side, should be in red. Schaeffler India and India Mart Intermesh. Stocks with negative news flow are IndusInd Bank, Bajaj Finance, Bajaj Finserv, 5-Star Business Finance and Praj Industries. Okay, that's the stock list for the morning. Now let's move on to commodities. We've got Manisha Gupta joining in with a roundup of all the overnight action. Manisha, good morning. Trade deal with India is happening, but what else is moving the commodity markets?
Well, I'll have to start with the crude oil prices because we've seen 2.5% of decline in the overnight markets. And with this, crude is down 15% in the month of April, and it's trading at a 2-week lows right now. The U.S. crude oil prices just about holding $60 a barrel right now. That is because of the shift in global policies, and that's weighing on demand outlook. The U.S. consumer confidence numbers came quite sharply yesterday. And then the markets are dealing with higher supplies as well. Remember, the OPEC will add 411,000 barrels from the month of May. And the U.S. crude inventories have risen by 3.5 million barrels. U.S. also is producing record numbers of oil right now. So everywhere that you look, you have higher supplies and demand uncertainty, and that has been weighing on crude oil prices. A quick word on the gold prices, and it's Akshaya Tritiya today, and the prices have seen a 1% decline in the overnight market. Well, that really leads to better buying expectations in the Indian markets right now. But the global crude price is clearly reacting to the optimism on de-escalation of trade war between U.S. and China. Also, the U.S. global investors do believe that the gold price estimates will be on the higher side by the time this year ends. We still have those banks reiterating 3,500 to 3,800 by the end of this year.
All right, Manisha, thank you very much for that. So that's gold and Akshaya Tritiya today. So we've been, of course, telling you about the stunning rise in gold prices for a while now. And, of course, we'll continue to put the spotlight there. We have N. Jayakumar, Group CEO and Managing Director at Prime Securities, joining in for some market conversation. Stay tuned, coming up. Welcome back. There's 20 minutes to go for the pre-open session. N. Jayakumar is now with us, Group CEO and Managing Director at Prime Securities. Jakes, good morning. Good to have you with us here on the program. You know, the last time we spoke, you were very confident that to get a deal with US done is going to be straightforward. And you kind of sort of presented that calculation about how we could knock off the trade deficit with the US by buying from the US, some of the stuff that we have to buy anyway. And I think all the confirmation which is coming in from Trump downwards in the administration seems to suggest that we are first in line to get a deal. So bang on there. We'll come to that in a bit, but let's just start with an individual situation which I think is top of mind for viewers today. IndusInd Bank, Jakes. What is your sense? I mean, trouble at the bank with the derivatives portfolio. Now we are seeing top leaders leaving, a committee being appointed. Your thoughts on the stock?
Good morning, and thanks for having me over. As far as IndusInd is concerned, I actually believe that like markets discount bad news ahead of time, this is actually the beginning of the resolution process in a sense. This is not, this is not something to be viewed, separately from what's already been happening. The change of guard or the change of leadership was a matter of time, and it's happening. In fact, if anything, clarity will emerge going forward. And my own assessment is the beginning of the end of the troubles, in that sense, is the way I'd look at IndusInd Bank.
But, Jakes, you won't see this leadership vacuum as becoming a bit of a concern at a time when banks will be sort of powering ahead with rate cuts, etc., moving on the growth pedal. Basically, is there downside to the stock? Because now suddenly, this is a new situation. The fact that he was going to leave was always known. But now that there is a sudden vacuum because of this.
Vacuum may not be for long. I mean, I'm fairly sure that the management board and RBI included would not have been sort of sitting back and waiting for this to happen before starting a search. My own assessment is that the search is probably already underway and probably close to coming to an end. Wouldn't surprise me to see a new person at the helm being announced pretty quickly.
All right. Hi, Jakes. Morning. Good to see you in. And I think RBL Bank is another stock that you've been tracking closely. Is the worst behind for them?
Don't like to talk stock specific in that sense, but yes, I have been pretty public in my pronouncement of the same. They've been ahead of the curve on a whole bunch of things, including provisioning, etc. And I think the management commentary post results were very heartening. And that apart, I mean, the disclosure that I would have a vested interest, as would Prime, and in terms of investments and other mandates. But to put it simply, I think the worst is well behind.
Okay, all right. Jakes, in the past, you've got the timing on a couple of Ferris names as well, very correct. Now you have a special situation that's playing out on Vedanta. And that's something that you've liked. Besides what's happening on the globe, actually the stock appears very, very well placed. Even if you take into account what Mr. Agarwal does next is anyone's guess. But this demerger seems like a value unlocking proposition. What's your take?
To put it very simply, yes, it is value unlocking. Equally, a lot of institutional investors will actually find the split pieces, 3, 4, 5 companies as the case might be, too small to hold. So like ITC Hotels got sort of, in a sense, sold off by people who found that the value of that particular piece was much smaller than what their portfolio would permit. So you could have a technical situation post in terms of institutional investors, but you could have a great situation in terms of individual and HNIs who would find the individual pieces far more value accretive than an agglomerated whole, as is the case as of today.
Got that. Jakes, so 2 questions. One, apart from individual stocks or areas that we've discussed, where else are you finding, where else can one take positional calls from here? And second, we've seen foreigners coming back. What's the feedback that you are getting? Because it seems to be a step change, very different from what they've been doing for the last several months. And the problem, though, is very quickly the market gets into, people start complaining about valuations once again because earnings growth is still anemic. So your thoughts on these two?
My resolution and also the mandate from you was to keep the answers short, shorter than the length of the questions.
So that's a nice one, Jakes, but go on.
It's clear the foreigners are coming back big time. Yeah. B, we did talk about the end of American exceptionalism, if you will, or at least a shift from America to the rest of the world, where the dollar index is the leading indicator of what's happening. So if you want to look at something, forget looking at the stock markets in the US, look at the dollar index, and I think that's telling you where the money flow is. And it's well and truly below 100, in fact, straddling 99 as we speak. Number 3, for the first time, you have a confluence of 3 factors. Locals continuing to buy, which means that the flows into the local institutions is continuing. And a lot of people who are sitting on the sidelines in terms of funds with larger allocations of cash are redeploying that. This confluencing with foreigners coming back and the heightened panic or the heightened nervousness there is amongst HNIs and individuals. I've never seen a confluence of these 3, foreign and local flows, plus individuals and HNIs actually fearing war and so on and so forth, and portfolios having gotten lightened over a period of the last few weeks. And all this points to a much higher markets in the weeks to come.
Okay, sounding good. When flows are in, then all bets and all arguments pretty much fail. Finally, Jakes, PSUs and specifically defense stocks, they told us when we were going through this 5-month correction that the new bull market will have new leaders, etc. But look what's happening. I mean, Masgao Dock in blue sky territory, Many of these stocks barely off their 52-week highs now. What would you advise here?
I think the issue with PSUs has been order execution, at least in the spaces that you mentioned. So that will continue. Simply because there's a greater threat of war doesn't mean that something has changed overnight. Some of these things take time for orders to come and orders to get executed. So I think that continues. Most of them had good order books in any case, and spending on defense was already on the rise even before this particular set of events in recent times. So keeping that in mind, I think the PSUs are still a bottoms-up story. You need to go to individual spaces, not sectors as a whole. But I also think the government will use the next 12 to 18 months to actually divest their stakes and get divestment targets going in a lot of the PSUs.
Okay.
Got that. By the way, the last point, I just wanted to clarify, Jakes, you said, so institutions, both local and foreign, are buying, but you're saying amongst HNIs, there is a bit of a panic. The need to get in, that panic, or are they worried about this escalation at the border?
I think there's a lot of worry. I think a lot of talk in recent times that I've heard about preservation of capital, uncertainties in the world, paradigms have shifted. We can't expect things to happen when the world's number one person is sitting on $400 billion of cash. Who are we to make a call on the markets? So this kind of conversation has been on. And more recently, of course, the war and the attendant fears around the war. So for the first time, macro issues are dominating micro investing. And I think that's a good call if, large sections of the audience are worried. And you have foreign investors with allocations coming through. For the first time, I may say, in many quarters. I think it's a sign that, we are where 21,900, 22,000 got defended. Maybe 23.5 to 24 has become the new 21,900, 22,000.
There you go. You left us with some sort of a, price understanding of these issues as well. So perhaps 24,000 is the new base for the market. Very helpful conversation, Jakes, this morning.
Surabhi, I just wanted to say that, Jakes, all the best for the conference tomorrow, the Springboard Conference. This is, I'm looking at the schedule, a pretty interesting one. And of course, we are partners, CNBC-TV18 are partners as well. So pretty good lineup of guests, etc. So wish you all the best of luck. And I hope this is the first of many that we are.
Thank you. And, delighted to have CNBC as partners. In fact, I may add the best in class in that sense from a media perspective and from a venue perspective that the Indian Hotels is also part, is the venue for this. So quite looking forward to this and hoping to make this an annual startup convention.
All right. Absolutely. Thank you very much, Jakes, and good luck with that particular conference. The Gift Nifty should come up on your screen quickly, and we should just see if it's still down about 90, 100 points, as it was indicating, about 100 points still lower. And I think the last point was instructive. The fact that HNI seemed to be a little worried about all kinds of things. And of course, at the margin, the latest new thing is this India-Pakistan escalation, potential escalation, which they seem to be worried about. But I think we have Prakash Diwan with us, guys.
Yes, we do, Nigel. So lots of earnings, lots of stocks to discuss.
Well, that's right. Let's focus on a couple of big earnings that came in overnight. And in fact, let's talk about the result actually that came in towards the end of close. That's Trent. Prakash Diwan joins us. Prakash, what do you think of those numbers? The fallen angel from 8,500 all the way to around 4,500. But yesterday, the street really liked the margin performance. The gross margins were under some pressure, but the absolute reported EBITDA margins was something that pleasantly surprised the street. What's your take on the stock?
Good morning, Nigel. So definitely there's some silver lining to otherwise what would have been a disappointment. There is this very clear indication that value retail has been doing well. You saw how Vishal Mega Mart also kind of reported numbers, some of the other numbers that have come through. So there was very less likelihood that Trent would also manage to do it. But I think the Zudio magic continues to work. And what they've also done, if you notice on the ground, they've rationalized a lot of their stores. What is working well for them, they've expanded, doubled sizes in certain places. What's not working, they've actually moved out. And it's a very serious long-term plan that's kind of now getting to be unveiled. So we've seen geo numbers, the retail numbers from Reliance. So there is a very clear unaddressed segment that's kind of getting into that organized space. Trent's taken advantage of that. Is it expensive after this fall? Yes. The numbers are great, but it's always been priced at a PEG basis where you try to kind of make it look reasonable. But I think it still looks a bit unreasonable to me. It is expensive. You'll have to wait for dips to add to it if you're a serious strength fan. But the numbers at least give you that respite that something could happen very soon on that.
Okay, got that. Prakash, hi, morning. State Bank of India. SBI is looking to raise fresh equity capital. Doesn't happen too often. That, and of course, we'll be hearing numbers. In general, banking is the flavor of the season. Your thoughts on the stock?
No, I think, good morning, Sumesh. I think they're gearing up, building the war chest for the next phase of growth. Remember, SBI has been fairly consistent with credit growth even when the others struggled, for the simple reason that they sit on a very advantageous position as far as CASA is concerned. But the book that they run and the book that they could possibly run, given all the improvements that they've done in technology and the back end, is very clearly, and you'll be surprised if you look at the gold loan portfolio, that has grown so significantly, and we'll wait for the final numbers for the quarter to come through to see these metrics. But I think it's a very positive move. It will get a lot of opportunity for people to participate, particularly institutions who would be wanting to allocate much more money. I mean, I wouldn't be surprised if this fundraise gets completely overwhelmed by FI participation as well. I mean, of course, subject to limits and all of that, but there'll definitely be a very, very decent appetite for this paper.
Okay, all right. Prakash, very quickly, if you could tell us about Bajaj Finance. The numbers came overnight. They're also going to make the stock more affordable for the retail audience, post that corporate action. But the problem is that the stock has seen a big run in the last few months. So it's not as cheap as what it was. What's your approach to the name at around 9,000 rupees?
No, I do agree. I mean, even if it kind of comes down to 900 and starts looking affordable, there could be accumulation in different pockets. But remember, this is a space where beyond this to grow is always going to be a challenge, and especially growing with a quality book to boot. We've seen the likes of Poonawalla Corp, all of these which have been very aggressive in terms of growth. So growth, which was one of the advantages that Bajaj Finance got, is no more kind of getting its premium. Quality is probably the other thing which it still has. But my concern is if you're on a treadmill and if you keep increasing the pace, at some point it's extremely difficult to get off without an accident. So that's where it is. But yeah, let's see if once the retail participation comes in, there could be distribution which could give some solidity to the stock in terms of these moves ups and downs. But right now, I think the up move needs to get digested after these numbers, and you will see this kind of petering out for some time.
All right, Prakash, got that. We'll say thank you for now, but we have more questions. Whirlpool, for example, is something I wanted to ask you. Stock was up big time yesterday. There is, of course, that potential stake sale which is going to happen. But last night, out of the US, there is news on Whirlpool that Moody's has cut their credit rating to junk for Whirlpool, the global entity. Any implications here, etc. We'll come back to this in a bit. We'll take a quick commercial break here. We'll come back with Sudarshan and Mitesh in terms of specific trading ideas. Stay tuned.
Welcome back. As promised, let's get our technical guest on the show. We have Sudarshan Sukhani as well as Mitesh Thakur who join us. Good morning, gentlemen, and good to see you all in. Well, we've got a market holiday tomorrow because Maharashtra Day, it's Labour Day as well. What's your take? The GIFT Nifty suggesting a 100-point downtick. Buy into that dip. Mitesh, you go first.
Morning, Nick. So yesterday I talked about taking profits around 450, 500 zones, and I think we got a high there. Broadly, my sense still remains that it will be a market which will go through a phase of consolidation with 24,500 broadly as the upper end of the range, while 24,000, or in the worst case scenario, 23,850 as the lower end of the range. Given the fact that we just hit the upper end of the range, I think today I won't be very eager to buy into the markets. But yeah, if we get more declines over the next couple of days, we get closer to the lower end, that's the time to buy the index.
Okay, got that. Mitesh, Sudarshan, morning. What is your call on the index?
Yeah, good morning. See, the market is in an uptrend. Now, within that uptrend, we will have small setbacks as we had yesterday, a small dip, as implied open suggests today. So that's part of the normal. So my trade is still to go and buy any dip. The problem here is something else. We have only one working day in the next 4 days. So whether you want to buy that dip and take the risk is a personal preference. I would still say buy call options on for the next week and stay long.
Okay, all right. You know what we'll do is we'll take a quick commercial break here. We're going to come back with Sudarshan and Mitesh on the other side, and we'll ask them for their specific stock trades as well. Stay tuned.
Welcome back. Let's go back to our technical experts and get some specific stock ideas for the day as well. Mitesh, what's your stock list looking like today?
Honestly, after many days of all buy list, today I have a mix of buys and sells. Adani Enterprises is on the sell side with a stop at 23.70 for targets of 22.50. And BEL, mild decline. Say if you get a rupee and a half kind of a decline around 316, 315. Buy with a stop at 309 for targets of 330. A sell on Coal India with a stop at 395 for targets of 375, and a buy on Prestige. That had a big breakout yesterday. So Prestige is a buy around 1365 with a stop at 1320 for targets of 1450.
All right. And Sudarshan, let's come to you. Stocks for the day?
Yeah, it's a mix. It's a buy list, and there are two major sectors: financials and well, so-called defense-related stocks. So Tube Investments, which comes rarely in my list, is a buying opportunity with a stop under 27.67. AU Bank is a buy with a stop under 690. And then we come to those defense stocks. BEL, same as Mitesh, is a buying opportunity with a stop under 310. And HAL, and let me say that I have a very modest buying, portfolio in HAL. It's a buy with a stop under 45.17.
All right. Fair enough. Sudarshan, you may want to listen into the next sort of conversation. We are talking defense here. But thank you very much, Sudarshan and Mitesh, for joining us with those individual trades. Now, Prime Minister Narendra Modi asserted that the armed forces have complete operational freedom to decide on the mode, targets and timing of India's response to the Pahalgam terror attacks. He chaired a meeting with the top defense establishment yesterday evening. Those are visuals which came out of that particular meeting. Parishit is here to tell us what happened and, of course, what's the thinking now in New Delhi. Parishit, morning.
Well, the aim of the meeting was to give a complete freedom to the three forces to take any kind of operational decision to respond to the Pahalgam attack. So clearly, this means that there will be a calibrated response, which was expected. When that happened, that remains to be seen. But that was a show of strength. We've also been seeing how the Indian Army, the Air Force, the Navy, they've been carrying out military exercises in the country. There are very intense counter-terrorism operations happening all across Jammu and Kashmir, even as we speak. And this is ever since the Pahalgam attack. The situation at the border also remains tense. We've been seeing at least 5 or 6 ceasefire violations by Pakistan along the line of control since the Pahalgam attack. And just last night, we have seen a ceasefire violation along the international border as well. So there was small arms firing by Pakistani forces and Rangers. The Indian Army has been retaliating effectively. What is also happening is that there is an international pressure to de-escalate. The U.S. government has spoken to both Pakistan and India to de-escalate the situation, resolve things diplomatically. The UN Secretary General also called the Prime Minister of Pakistan, Shehbaz Sharif, yesterday, and the Indian Foreign Minister about reducing tensions as soon as possible. There is international worry about any kind of major conflict between India and Pakistan. Everyone would like to avoid that, and that international pressure is also playing on India.
All right, Parikshit got that, but let's see. All the comments that are coming in are talking about what India needs to do to secure itself and, of course, avenge the death of 26 civilians here. Thank you very much for that. By the way, before we invite our next guest to discuss defense stocks, all of them were soaring, going through the roof yesterday. Before we get to that conversation, hear out what the defense secretary had to say as well. He was speaking on the reforms ahead for the sector, working towards cutting the acquisition timelines, as the defense acquisition timelines, and also talks about the GE HAL F414 engine deal. saying that the government is hopeful of seeing the manufacturing line kickstart by the end of the year. Take a look.
We've identified that there are various sort of processes involved in our procurement, which includes everything from cost negotiations to field evaluation trials to preparation of RFPs. All of these had certain timelines that were often very, very elongated. We've, through the DSC, we've already taken a view that many of these timelines are going to be compressed. Essentially, what we are trying to do is ensure and accept higher accountability within our system for the various collegiates and groups which are, for example, doing the FATs or doing the RFPs. As part of that, the DSC has already taken a decision in terms of compressing many of those timelines so that we take us several weeks out of this procurement process. Technology transfer for the General Electric 414 engine, that is a negotiation that is ongoing between the HAL from our side and GE on the other. That is making progress, and that will help us meet the requirement of a jet engine for the time being in the interim. This year, I hope so. This is being led by HAL. We don't get into the nitty-gritty of that negotiation, but on our part, we've been asking both players, GE as well as HAL, to try and expedite this so that our production schedule for the future Tejas, I think it's Mark II, doesn't get affected. So yes, that is something that we are nudging from our side, but the nitty-gritty of the negotiations we are leaving to these two agencies.
Okay, all right. So that was the Defense Secretary giving us an update on a lot of the critical contracts. Also spoke about the latest order with Rafale, the Rafale M fighter jets that the Navy has inducted, talking about a lot of opportunities there as well in the entire ecosystem. Let's quickly discuss this and more with our next guest. We have Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities, joining in, who has, of course, coverage on the entire sector. Jyoti, thanks for being with us. You know, the pullback in defense stocks has been absolutely astounding. Many of them, like Mazagon, are already at all-time highs. BEL, I was just checking, is 6% away, and most others are between 15 to 20% away from reclaiming their old glory. Now, do you think this rush back into defense names is because of the environment and the mood and the sentiment right now? Or would you say there's a lot of fundamental reason to go and buy defense stocks as well?
First of all, thank you so much for having me here. The initial rally was basically on the order book, which I have iterated many times. Now it is the step up in execution. In defense, what we've really seen is the execution has never been more than 30 to 33%. Now, this is actually going to culminate into, actual deliveries of platforms and equipments. And that is, so fundamentally, yes, there is a huge reason why the stocks are moving up. The other thing is the kind of order book that we are seeing. While the government has locked in 193 contracts worth around 2 trillion rupees, and which is going to grow at 20% CAGR till 2030 to 3 trillion, I think this itself from 20% should actually increase to something like 25-30. Other thing is the kind of orders that we see is what we know in the public domain. So there's some companies, what they are actually announcing, the order book could be actually seriously quite higher than what is actually being announced in the press. So
Jyoti,
yes, and eventually when the execution starts happening, you'll be surprised the kind of numbers we'll be seeing going forward for these.
So Jyoti, I'm straight away getting down to stocks, because that's what everyone wants to understand. The opportunity we know and the order bookings we know, but it's going to boil down to soundness of execution, pace of execution, and reasonable comfort in valuations. You like a whole host of companies, including private sector names, as I can see here, Data Patterns, I think Bharat Dynamics as well. So just take us through some of the top picks and why.
So my topic actually is HAL, if you see, and in fact, just a moment back when Mr. Defense Secretary also said that we are stepping up pace of execution. So while we were not even anticipating one LCA being delivered, you could see maybe some higher number of LCA Mark 1s being delivered in FY26, and the timelines for F Mark 2 is also being reduced. So therefore, while we are looking at, a book of, somewhere like 180 billion is what we were looking at HAL, this could actually be somewhere much higher than what it could be in FY27. By the time we even reach FY27, these numbers, the growth itself could be 30-40% revenues, while we have just factored in something like a 14%, very meager growth of 14%. The other thing is solar. Now, if you look at solar, solar is a sole company which is making warheads and initiating systems. While they're saying a 135 billion book, the book is already crossed something like a 150, and I believe they would be sitting at a much higher order book. And when it comes to warheads, it's the only company in the country which is making for BDL, Larsen Toubro, and going forward for Adani as well. So you can imagine the kind of workload they will have in the next, 3 to 4 years. And, the timelines where we used to see something like 8 years, 10 years timeline, it is no longer there. You need, one, you have huge foreign orders, coming in to these companies, and the delivery timelines have been shrunk to almost like two to max 4 years. So one, there is a huge pressure of delivery and execution in these companies. The third company that I like is Bemel. Now, in case of Bemel, what you see is the execution delays are there. This quarter also, you will not see very great numbers, in fact, for Bemel. But FY26 should be a good year for Bemel with the deliveries of the posters and the launch systems, because this is the only company which is providing launch systems to BDL for its missiles. They're not into anything else. Now, if BDL has to deliver missiles, they need launch systems, and therefore both have to work in collaboration and ensure that the timelines are met. So therefore,
Jyoti, running into market open, sorry, it's a fascinating conversation. Always great to speak with you, and you bring such perspective and depth into these sectors. I mean, cement and defense now, of course, as well. Which one is a portfolio stock? I use that word, which can be part of your core holdings, right, for the long term, and which gives you maximum kind of upside, in that sense, like more tactical. What's your sense?
Okay, so if I look at the 9 stocks that I cover, now within that, if you ask me surprise factors to come from, that will come from HAL, BDL. If you want me a stable growth, something which is going to give me an average growth of something like 8 to 9%, that will be BEL. Now, Data Patterns, another company which is going to do while people have concerns over their working capital. I think that's a short-term, concern which was there. This is going to improve for Data Patterns because the kind of, forward look, the thinking that they have in terms of the EW product platform, I really like it. I think Data Patterns, another company which will perform extremely well. You've seen 3 quarters of sluggish growth, but I think moving forward, you'll see very good numbers for Data Patterns. Then Masgaon, which has done peak in FY25, that the government is going to be, finalizing orders of Scorpion. Obviously, the orders will be broken up between L&T, Garden Reach, and Masgaon, depending on the technical capabilities and, the facility. So eventually, there's a huge order book pipeline which is still there. Execution, what we have seen, like 10 years, 15 years, is going to shrunk to like 5 years.
Got it.
There's a huge
all about execution, and we can go on, and we will. So we'll invite you back, Jyoti. Thank you very much for joining us. HAL, BDL, core in terms of portfolio, and of course,
solar
you talk about
as well. Don't forget solar.
And solar as well. Yeah,
There's
just very, very good company. There's Pinaka orders, etc. But of course, others as well. Thank you very much, Jyoti. Appreciate it. 3 minutes to market open, 2 minutes now. Trent is something more. I want to quickly put the spotlight on. Numbers came in towards the fag end of the session yesterday. Mangalam is here with more. Mangalam.
Numbers came in at the fag end. The presentation came in much after that, so which is why there were a couple of internals from there. The first one is that the fashion portfolio like-for-like growth has been mid-single digits. A lot of people would call that disappointing, but importantly, the company said the appropriate strategy is now to pursue revenue growth across micro markets versus just the stores, because the store density is increasing. So overall revenue growth is important to track. The other growth drivers, beauty, personal care, innerwear as well as footwear, are now 20% of their overall sales. And online, they've been fairly mindful of their online expansion because of the profitability. That contributes about 6% to West Side sales. The key number for me was, however, Star Bazaar, where the revenues grew from 735 crores to 857 crores quarter on quarter. Like-for-like growth at 2% out there. But importantly, contribution from own brands for Star Bazaar came in at 70%. that's margin accretive, so that's a positive. The stock has fallen about 35% from highs, trading at around 72 times. But remember, the peak was close to around 111 times itself. Brokerages. Morgan Stanley has an overweight call, target of 63.59. They're saying that gross margin compression implies some inventory write-off. Jefferies as a whole call, they've raised their target to 5,900 rupees. They expect 35% compounding in standalone revenue over the next 3 years. So we'll keep an eye out on trend today. Saw some short covering in yesterday's trading session. The question is, does it continue today?
All right, we're just sort of a couple of seconds away from market open and we'll have the rates come up on your screens in a bit from now. So it's absolutely flat, nothing on the Nifty. It's actually like yesterday. We started with very, very flat prices. About a quarter lower though on the Nifty now, about a quarter lower on the Nifty Bank as well. The sensex is down about 0.25%. Small cap and mid cap indices were up about a quarter yesterday, while the other indices were flat. This morning, there is, I think, a little bit of pullback here as well, but nothing large, nothing noticeable or something you'd quibble about after the gains and the pullback that we've seen come up recently. Let's quickly look at the Nifty heat map, which should give you a quick view of the lay of the land in terms of how stocks are opening up and down, at least on the 50 stock index. So it's mostly all down, 35 odd names lower, and the rest of the 15 odd names are starting the day in the green. And I do spot one defense name, BEL, in the green, at least on the Nifty, and I think there'll be more outside of it as well. Surabhi.
I was looking at exactly that. Are the defense stocks continuing their show from yesterday? Yes, they are. Look at Paras Defense. I mean, straight away 9% on Paras Defense as the market's opening up. Garden Reach Shipbuilders again 3.5%. Mazgaon, the Cochin Ship, the whole move has started after a 10 to 20% surge on these stocks just yesterday. So watch out for this space. Very, very hot. Anyway, back to the frontline indices. What's up is a little bit of pharma. Sun Pharma, Dr. Reddy's, Cipla, all of them on the higher side. HDFC Bank is ensuring that there is no wider fall. L&T and HDFC Bank, along with TCS, are the three big boys that are batting for the bulls. Otherwise, it's becoming a little quiet. Of course, BEL, as part of the defense pack, continues to do well. But otherwise, there's a big casualty in the Bajaj twins. Finance and Finserv are really taking it on the chin after the numbers. 5.5% lower on Finserv, 4.5% lower on Bajaj Finance. Trent is down 3%. Now that the markets had a chance to look at the numbers in detail. IndusInd Bank itself is down 1.5%. So this is interesting. There's no panic around IndusInd Bank just yet. The market is taking this exit in its stride. SBI, which is looking at an equity fundraise soon, stock down 2%. Overall, the market is quiet. And the Nifty is nursing a cut of 50 points at the start, but mid-caps falling a little more, Nigel.
Well, that's right. A few mid-caps are actually under pressure in today's trading session. Just a quick point on the Bajaj twins. The problem is the stocks are up 25 to 30% in the last 6 months or so. So irrespective of what the numbers would be, they have to be really, really good to see some kind of follow-through. From stocks in the broader markets that are moving around, Paras Defense, as you mentioned, Vishal Mega Mart, that's up close to 3.5%. You have the tailwind coming in for the OMCs, BPCL, IOC, HPCL. All of them are up to around 2.5% because of crude oil prices as well were down overnight. So those are a couple of counters that we're looking at. Tata Motors has come in for profit taking. You have Sambandhana Motherson as well that's come in for profit taking, and Suzlon, that's the other name that's in there with a bit of a cut. Volume's pretty high on all of these names. A few more stocks just to note. PB Electroplast, that stock is up close to around 3.5% in a market that's a little bit wobbly. So that's one of the movers on the upside. V-Mart Retail as well is up close to around 2.5%, so good going out there. And Fed Bank Financial, that's the other stock that's actually a little bit higher. Trying to find some winners, so just thought I'll highlight a few. Jana SFB, that's down 7.5%. Praj Industries, we'll get the management soon. That's down close to around 7%. Shopper Stop, down close to around 5%. So just highlighting a few movers from the broader markets. After a while, though, the breadth of the market is firmly in favor of the number of stocks that are declining. You have close to around 1,400 stocks declining, for around 400 stocks that are advancing.
All right, so that's basically the start. It's more decisively down now. If you look at the small cap index, it's down 1.25%. The mid cap index is down 0.6%. So a little bit more as compared to the Nifty and the Nifty Bank, which are down about 1/3% and 0.13% respectively. So that's a start this morning that we are able to work with. And of course, most of the result reactions are all mostly on the downside. News and news-related stuff is all on the downside. There's not very little except BPCL maybe, which is showing some green, 320 on BPCL right now. Manish Sontalia is with us, Chief Investment Officer at NK Investment Managers. Manish, good morning. Good to have you here. Thanks for your time. You've been bullish. You've been saying, well, the market's going to bounce. It's bounced and bounced sharply. What's your sense, Manish? Is there enough to do in terms of individual stocks from here, given earnings and growth visibility, and in which areas?
So, Prashant, 22,000 has held, and I maintain that 22,000 won't get decisively broken. That's played out. I think for the next 1-2 months, till the point in time you have clarity on the tariff, and basically that 90-day pause, out of which 15-20 days has already gone. So next 1-2 months, I think markets are going to be range bound between 22,000 and 25,000. Can't really be seeing an outbreak beyond 25,000 given the macros that we are in, given that earnings season is somewhat okay, not very great. So I would believe that we'll consolidate, and right now it is more about institutional buying. The banking space, the heavyweights, Reliance. You have the technology space after the correction. So I think it's more to do with smart money buying in and around the indices, the heavyweight indices level, rather than individual stocks at this given point in time. So it's more to do with index management. Currently, now that we have bounced back 10% from the lows, I would believe that you'll see broadly the heavyweights on the index largely play out on the positive side till about that 25,000, and then we'll be basically consolidating around that point.
Manish, hi, morning. Great to have you on. I know you won't talk stocks, but maybe we can get a indicative direction. I'm looking at Bajaj Finance this morning. It's down 4.5%, almost 5% actually. And the only, I think, crease in the earnings, if one can find, is maybe the fact that they have taken certain ECL provisions. And I think, that's the talk point, whether credit cost indeed is peaking out now or not. 1.85 is what they're guiding for. But in general, I mean, the stock has done so well, right? I mean, look at the way NBFCs have rallied in the last 2 odd months. What would you do with the NBFC space? Would you go here? Would you stick to banks? And how does one look at, and Shriram Finance was the other casualty in this earnings season. So it's been a little odd for these large non-bank lenders. Your thoughts?
So first of all, numbers were pretty okay for Bajaj Finance. I would believe it's to do with, the maverick, Mr. Rajiv Jain, who is now becoming the vice chairman. He has led the company from the front over the last 20 years. And now, he is going to be the vice chairman. So I think market is somewhat, not used to not hearing Rajiv Jain on conference calls henceforth. So that's one point. Secondly, credit costs are definitely, something to worry about as far as the Bajaj Finance numbers are concerned. Nothing alarming because they are still guiding for AUM growth of 24-25%. It's to do with valuation. The stock has run up so much. But I think, it's nothing fundamentally wrong with the company. They are guiding pretty good growth. The valuations are pretty full at these prices, so maybe that's the best time to take profits. I could read just that into Bajaj Finance. I mean the NBFCs as a whole, whether you look at Chola or Shriram, there's some concerns around the NPA numbers. Even Chola numbers, NPAs were slightly elevated. Bajaj was already a disappointment as far as the ECL provisions are concerned. Of course, they called it out as one-off, but markets have their own reading of the same. And similarly with Shriram Finance. So, the sector remains in a sweet spot because repricing of deposits are happening immediately for NBFCs in line with lending rates. So they are able to maintain their spreads much better than banks because liabilities on banks will come down over a period of time, whereas lendings reset on MCLR, EBLR is happening immediately. So
to buy or not buy? Sorry, coming in over here to try and sort of squeeze in more in the time. Point is, when you see these sharp dips, whether it's Chola, more importantly Bajaj or a Shriram, is it all passing, manageable? So buy the dip or stay away?
Let's buy the dip. There's no doubt about it. There's nothing alarming about these banks or NBFCs, just that bout of profit taking after they have rallied 20-30%. That's about it.
Okay. Hi, Manish. Good morning and good to see you, Ben. If I remember correctly, you were quite positive on capital market related plays as well. And from that space, a couple of stocks have done very, very well. But now valuations, they could be a bit of a headwind. Currently, what are you bullish on from here on? Because a BSE, well, it saw a sharp correction of 30%. Guess what? It made a fresh all-time high yesterday. So what are you bullish on this theme now?
So, it's got to do, I can't understand the valuation difference between unlisted NSE and the listed BSE. BSE is trading at 90 PE plus and, unless and until earnings surprise massively on the positive side, for BSE, even that's not, quite doable currently, given the regulation change around settlement dates. So difference in NSE and BSE valuations, 30 P out there, out here you have 90 P. There you have 90% market share, you have broadly 10% market share. I think on the BSE side, it's more to do with bonus stripping, all of that just comes about. But capital market plays, etc., looks quite decent in this downfall. I'm particularly more bullish on the depositories, RTAs, asset management companies, whatever asset management companies have reported numbers. They have all gone up from their lows. And I think from a medium-term perspective, they all look quite good. Even the broking platforms, selectively, wealth management platforms, I think they are all investable from a medium-term point of view. You're getting it at lower prices, but just keep in mind the valuations, exorbitant valuations, 50, 60p won't hold. But anything like 25, 30, 35p, these platform companies are likely to create wealth in the medium.
Okay, all right. I think if I remember correctly, you're also positive on health insurance.
Yeah.
That theme has not yet played out, I think so. Tell us more.
So Star Health reported numbers yesterday. Underwriting profits were disappointing. Investment gains were pretty okay. I think it's a work in progress. The fact is that you are getting at 15, 17 PE multiples and, increase in premium rates around the corner. So claims ratio for some of these leading health insurance plays are best in the industry, 65 to 69 odd percent. And plus you're looking at increase in premium rates. That would mean that you are looking at implied growth rates of around 25 to 30%, and you're getting it on multiples of 15 to 18 times, which is basically less than 1 PEG. I think a good investable idea, without too much of risk.
All right, interesting call out there, because the IPO was at around 900 rupees. The stock has come down to under 400 rupees. But you believe post the correction and given the tailwind that it has, you believe valuations now are more palatable. So that's in Star Health.
Okay, got it, Manish. We're really, relishing it this morning. You're giving such wonderful perspective on these, big movers, which are of all, earnings driven. So I'm going to take my chance with one last one with you. Trent. Just your take on the business. Dream run, but is it over? Is it really over? Because you cannot sustain at maybe 70, 80, 100% growth rates. And the stock is still at 70 times forward earnings. What should current investors do? Same question. Buy the dip or just stay away?
Trailing 12 months is 100p. So I think it's it's got to do with valuations. There's nothing wrong with Trent. Great company. But 15% margins, this time around, they have reported 16% margins. Whether that's going to sustain, that's the big call. But execution holds and valuation holds. If the valuations come down to less than, 3 times price earnings growth, it could be an investable idea. But currently, valuations are concerned.
Which would be where? 3 times PEG for Trent would translate into what sort of CMP, roughly?
100p, so it's grown at 35% on the top line. So multiplied by 3 times, you get 100p multiple.
Okay.
Right. Zomato, Manish, any thoughts? Zomato, Swiggy?
I think, whatever narrative is coming around in social media regarding, problems at Zomato, still I think they would be the last man standing, given everything. A lot of positives as far as operational leverage is going to play out for them. And yes, opening of dark stores and discounting by competition would take some sheen off the Blinkit SOTPs. But even then, there is some margin of safety from where we are in Zomato. So I'm not negative on Zomato at all. In fact, it's one of our portfolio holding stocks. And the simple understanding is that, this is basically irreversible. The quick commerce and food ordering that has become a habit. India wants everything in 10 minutes. That's become a habit. It's not reversible. That's one. Secondly, if there's anybody who's going to have the economies of scale and would be the last man standing, it's going to be Zomato. Yes, Amazon has deep pockets. You have a Flipkart which has deep pockets. But to get the unit economics right, you'll have to burn a lot of cash. And I mean, it's an evolving situation, but currently it looks like that, Zomato is in the best form and shape as far as the growth and the valuations are concerned.
All right. Thank you very much. And just platform companies, right? I mean, you start with capital market plays, and I mean, these are, of course, in the different space, but all kind of tying in with broadly consumption and consumption growth. Thank you very much, Manish, for joining us. A good conversation as always. Let's get on to the earnings treadmill, and I think CEAT is the first one.
Well, that's right. Let's focus on CEAT. That's the management on our radar. Earnings were better than estimate. The revenue growth has been good, driven by domestic demand, both in OEM as well as in replacement market. But margins, they've slipped a little bit on higher input costs. To discuss this and more, we're joined by Mr. Arnab Banerjee, the Managing Director and CEO at CEAT. Hi, Mr. Banerjee. Good morning and good to see you in as always. Congratulations on a good showing actually in the past year. Double-digit revenue growth, double-digit growth even for Q4. Give us the outlook, though, from here on. For FY26, can you continue to grow in double-digit on the revenue parameter? And since you get more than 50% of your money coming in from the replacement market, what's the signs in terms of the economy? How are things on ground? Please go ahead, sir. Mr. Banerjee, I think you'll have to unmute yourself, sir.
Going forward, we would definitely like to carry this momentum of double-digit growth overall right through the year. The trends that I talked about last time when I was around continue. In domestic aftermarket, the urban market is urban areas, which is greater than 50,000 population towns, is a little soft on demand. Rural areas are doing much better. There is a clear delta of 4 to 5% incremental growth in rural for us, and we have the distribution reach to tap into that, so that's positive. OEMs, we expect the approvals to keep coming in for larger rim size tires and passenger, which I've been talking about, which we are focusing on. And we would like to see our share going up in that area, as well as in truck, bus, radial, and two-wheeler. So OEM, we are bullish vis-a-vis visibility that we have on approvals and the sale of those vehicles going up in this FY26. Globally, it is uncertain, as you all know, because of the tariffs and even other ongoing things, the war and some of the tariff and non-tariff barriers. So it will continue to be uncertain. So in balance, I would see most of the trends of FY25 continuing in FY26.
All right, so double-digit growth is what you're gunning for. Could you tell us what about the inorganic growth? You had made that Camso acquisition, and as you said, I think it would add roughly around, ballpark, I think 2,000 crores on your base of close around 12,000 crores approximately. Does it start contributing in this year? And what are you penciling in out of that? And this double-digit doesn't include Camso, or does it include it?
This is standalone.
Standalone.
Yeah. So Camso would be integrated into our business in Q2. All the antitrust issues are now done away with. All regulatory decks are clear. We are in accelerated mode of integrating the business. Q1 will not have any consolidation from Camso side. Q2 onwards, we will be starting to consolidate the Camso results into our system line item wise. It's too early to say how that will pan out because there is some turbulence always when a new set of owners come in. But we would like to focus on business continuity, retention of talent, retention of customers in the first 2-3 quarters, and then we'll take it up from there.
All right. Mr. Banerjee, good morning. How's demand for the recently launched 3 tires targeting the premium segment? And what's the market share in that segment currently?
The 3 tires that we launched are a Run Flat tire, which is the first time an Indian manufacturer, Indian brand is bringing to India. 21-inch rated tires and Calm tires, which is very relevant for the electric vehicle trend. These are niche products right at the top end for top end cars. Volumes are very small at this moment, but we expect to take a pole position there. This is going to grow in future, and this is especially 17-inch plus volumes in passenger car tires is just going to skyrocket as a proportion of the entire aftermarket. So volumes are still small, so market share doesn't make any sense to talk about right now, but we expect to have a leadership position going forward.
Mr. Banerjee, in the third quarter, I think at the end of that quarter, in the analyst call, you had pointed out that your overseas business was growing really well. You were seeing good demand from Europe. Now, with this whole trade disruption, what is the expectation? If you could just give us the split between the international business and the domestic business, and then also the split between the growth trends, volumes that you're expecting on both fronts.
So about 19 to 20% is coming from international business. This doesn't include Camso. This is CEAT standalone. And that ratio is being maintained right now. You're right. We have done very well in the EU area. And we continue to do well. And that's the most stable part of the business. Good on margins, good on growth. In all categories, in farm, OHT, passenger, as well as truck bus radial. The US business is small, but that's a future growth area. So the risk there is to future growth. But as of now, the exposure to US and therefore the impact of what's going on directly because of the tariffs proposed by US is not going to be material in FY26. There are headwinds in other parts of the world also, for example, Latin America. The areas which are doing well, apart from Europe, are Middle East and Southeast Asia.
Just to follow up on this, are you hearing any of your European clients, the big OEMs, talk about delays or deferring, any of their plans? Because, for instance, I mean, look at Tata Motors. They announced a halt on all JLR shipments when this tariff news broke. So are you expecting any sort of a slowdown in the European business? And also US, since you mentioned it's still an opportunity, just tell us what sense you make of the tariffs. The news changes every day. Now we understand that they're quite open to components still coming in. So would you look at expanding your presence in the US at all?
No, US is definitely a future growth market. As I mentioned, we are already present with our OHT business, which has started taking shape. We have just launched our truck bus radial and going to launch our passenger car radial this year. We are setting up our network. So nothing is stopped. We'll have to see the business model and the profitability and the product range that may get altered. We are hopeful of suitable, free trade agreement between the two countries coming along by the fall season. But if things stay where they are, India as a country doesn't have a competitive disadvantage vis-a-vis the US market, vis-a-vis other country as competition, which is, let's say, China, Thailand, Vietnam, etc. But things are fluid. It will evolve. We'll wait and watch. And as I mentioned, no material impact in FY26, but it's our growth market, and we are keen on investing in US.
Okay, all right. Mr. Banerjee, the raw material costs have cooled off, and that's what's helping your gross margins improve. I think the last time around as well, we briefly spoke. Your target, I think, is to get the gross margin back above 40%, and that could happen in the coming quarters. Given that, what kind of a EBITDA margin should we be working with for the coming quarter? Will quarter one be better than quarter four? And from then on, do we see some kind of stability, a margin band, if I could request you for one?
Yeah. So let me first talk about the raw material situation. Quarter four on quarter three, the crude prices actually didn't change much. Quarter one is definitely cooling off. So crude derivatives will gradually come off their current price levels going forward. Natural rubber international prices have come down to about $1,700 per ton, but domestic price is still holding steady at around just lower than 200 rupees mark. So that has not come off. Rupee has just now started appreciating, but it was depreciating earlier. So there are various factors at which we are looking at. The entire basket, if you see, quarter four and quarter three, it was almost flat, minor drop. Quarter one on quarter four, we'll see a very little drop, almost flat. Quarter two onwards is when we see raw material prices probably cooling off significantly. And that is when margin expansions may happen. And you are right, we are comfortable operating at 40+% margin. So it'll take a while to get there.
coming through. Well, let's talk about global shipping. Amidst the US-China trade tensions, and of course, global trade tensions, shipping as a sector is in focus. We have Mr. G. Shivkumar, Executive Director and Chief Financial Officer at G Shipping, who's with us. Mr. Shivkumar, good morning. Thank you for joining us. So let me just get this data to you, right? This is data on global TEU containers. I know you're not into containers, but just to give you a sense of the what's happening globally. This is as of the 14th of April, week ended 14th of April. US, this is, week on week. US imports are down 12%. China to US movement is down 22%. On a year-on-year basis, the numbers China to US is down 45%. So this obviously is a sharp slowdown that we are seeing as far as global trade is concerned. As I began by saying, containers specifically don't affect you, but the indirect second order, third order effect on tanker market, oil prices have fallen sharply. Tell us what you're seeing.
Morning, Prashant. Thanks for having me. Yes, we're not in the container business, but I think it's fairly logical, the outcome that we're seeing, which is that container trade has sort of, especially the China to US trade, has fallen off a cliff. Yes, that doesn't bode well for the container business if things continue the way they are, which is with very high tariffs on Chinese goods. But coming to, as you put it, the second and third order effects on the rest of world trade. One is, of course, if you have more inflation picking up or in the US, which leads to potentially a recession in the US, or at least slower growth, and which again leads to poorer growth worldwide. You would have a slower commodity demand as well, which would affect us. Coming specifically to US and China, there are only two commodities or two sets of commodities really which affect the commodity business in any significant way. One is propane. About 14% of global LPG trade goes US to China. And this is a trade route which has developed in the last year or so, in the last decade or so, as US shale output went up a lot. And the other is ethane, which again is a new developing trade. We are not in that at all. And dry bulk, which is grain from US to China, is a small part of global dry bulk trade, probably 1% or so of global dry bulk trade, so not as much of an impact. But yes, the signs for the global economy are not great if we have this kind of uncertainty going.
I think last night, I think propane or ethane, China has kind of cut tariffs, right? They've allowed tariff-free imports to come in.
That's right, ethane.
Ethane, yeah. But you're not in that segment, right? Could you give us a sense? Is there any way to estimate, what are rates like, tanker rates like right now?
So no impact at all on tanker freight rates so far. No impact on either crude tankers, product tankers, or bulk carriers. We had a sharp drop in LPG rates. Again, this is that propane trade going from US to China. So that's a VLGC trade, that's very large gas carriers. Those spot rates dropped off very dramatically in just the week or 10 days following the Liberation Day announcements. They've bounced a bit now because, again, if the product is being, if the commodity is being produced, it will tend to get transported somewhere and you will find the clearing price for it to go to find a buyer. So that trade has bounced after that. Is bounced substantially from the lows that we saw immediately after Liberation Day.
This in the past we've spoken to you of the other thing which is going on is Russia, Ukraine, and you've maintained that shipping rates will fall sharply as and when that kind of some sort of a ceasefire is reached, and Russia, Ukraine is much more material for crude product, etc. Again, there's been some talk for a while, but some talk that something may come in terms of a ceasefire. You want to provide us with an updated assessment?
Yeah, that's geopolitics and we're not really experts there. But yes, if there is a rapprochement between Russia and the US and NATO on Ukraine, we think that it'll bring tanker rates down because that was a significant ton-mile impact. However, I don't think it's going to normalize so quickly, even if there is peace there and there is some kind of ceasefire or a peace agreement which is brokered. So it'll take time to feed through, but yes, you could have rates coming off if that full impact reverses.
Sorry, just one more broader question with regards to India specifically, Mr. Shivkumar. I mean, this, and we will hopefully over a period of time benefit with more trade as there is a shift away from China. I mean, does your business get impacted at all in any way?
No, not really. The one thing that I should mention on Russia, because we mentioned Russia, that the US is tightening sanctions on a lot of ships, whether involved in the Russian trade or the Iranian trade, both of which are sanctioned, subject to sanctions. And that's affecting the supply of ships. Now, these are tankers that are doing the trade. And so those ships are getting taken out of the system and therefore making the system less efficient. So it's not just on the supply side or where you need ships, which is from the ton-mile impact of the Russia-Ukraine war. The US is also putting pressure on the ships which are doing that trade, so you could have those ships getting taken out of the market as well.
Mr. Shivkumar, please.
Sorry, we've also seen Indian imports went down a bit from Russia immediately following those sanctions which happened in January 2025. But now they've bounced again because we are down below the EU price cap of $60 per barrel for crude oil.
Interesting. We are hearing a lot about, a lot of focus in the US, for example, with regards to shipbuilding, focus on shipbuilding, right? I was looking at data last 5 years. Actually, US has hardly made any ships. I mean, of course, it's a cost thing. Japan, Korea, South Korea, and China. Of course, China is the biggest. As an operator, because this is a long drawn story, but are you expecting a lot more supply? What's your sense?
Shipbuilding capacity in the US is very low. And as you mentioned, they are very expensive. So they don't compare in price with the ships produced from the three main producers of ships now, which is Japan, Korea, and China. So it's tough for them to compete, and it's not a huge amount of supply really. India itself is looking to boost shipbuilding, and we are probably closer on the cost curve to the big three than the US is. We are much closer if we can get those capabilities done.
And no decision on buying. Are you closer to buying anything? Doing anything?
No, not really. Prices are down a little bit, but not really. We are still waiting to get those attractive prices.
Okay. How as you look at FY26, how does it look compared to the last year?
So I'm not going to give
earnings wise, yes.
Yeah, so markets are a little lower now than they were a year ago for tankers. So that's all I'll say. We have a board meeting coming up in about a week's time, and we'll discuss those after that. But again, uncertainty, there is so much uncertainty around everything, as we started with what's going to happen to the world economy, that it's getting even tougher to forecast these days.
I understand, and we'll speak once you sort of come out with those numbers, Mr. Shivkumar. We'll talk numbers then. Thank you very much, but interesting perspective on the space. That's the GE Shipping Management there. Well, 20 points higher on the Nifty, which means that it's a bit of a turn that we've seen coming through on the index. Absolutely, from the opening lows, we've come up pretty smartly. Mitesh is with us with what he'd want you to do. Mitesh, good morning. What's on your radar?
Yeah. So, Prashant, I think on the index, we continue with that kind of subdued kind of view, when the markets will still consolidate and you will see supply emerge at 24, 450, 500 zones. But on the stock side, you will have some opportunities. And I have a sell on Adani Green. Actually, it's just about to break below the support pivot of 905. It made a low of 911. So sell below 905, take a stop at 925. And look for a target of around 870 to about 860 on the downside. And on the buying side is APL Apollo Pipes, I think. That's a buy with a stop below levels of 1605 for targets of 1690.
Okay, all right. Fair enough. Mitesh, we'll leave it there. Thanks very much. We'll take a quick commercial break here. We're going to come back with what's happening as far as commodities are concerned. Manisha, on the other side.
Welcome back. It is Akshay Tritiya. So what else? But we have our commodity queen coming in the house now to talk gold. And Manisha, I have to start with this. Sona, kitna sona hai? What a run! I mean, on the metal, this Akshay Tritiya.
Oh well, absolutely sona hai. And the kind of gains that you've seen in the last 1 year absolutely have been glittering. Surbhi, it is said that whatever you buy this day does not give you losses going forward. So it can be a business, it can be gold, silver, diamond, jewelry, but these are the things that are mostly bought. These are the numbers that I have gathered from the industry, where we understand that usually on an Akshay Tritiya day, you see a buying of between 18 to 20 tons of gold. This time around, because the prices are at all-time highs, near ₹1 lakh at 10 grams, so the industry anticipates that 12 to 15 tons of buying, even at these prices, is what you can anticipate in the day-to-day. We do understand that the Akshay Tritiya started last evening and it continues until tomorrow morning. So there are various auspicious hours in there where you will see people buying gold. This is a chart that tells you on how the gold prices have behaved during Akshay Tritiya in last 5 or 6 years. I mean, as you can see, from 47,000 in 2021 or even 50 in 2022, we have seen the gold prices surge quite higher. Last year, same time, the gold prices were trading at around 72,000. They're trading at 96 to 97,000 at this point in time. So nearly 23, 24,000 of a jump up in last 1 year itself. And people do buy silver as well on Akshay Tritiya. And because the gold prices are so expensive, you could be looking at silver buying picking up as well. And here as well, as you can see, silver mostly has trended between that 70s and 60s for the last 3 or 4 years, making higher highs. And this year, on 13th of March, we saw silver prices gain beyond above ₹1 lakh a kg as well. So very strong gains, as you can see, in over Akshay Tritiyas for gold and silver prices there. There are various ways to buy gold as well. For the longest time, it was physical. Even now, 60 to 65% of buying in gold happens in the physical markets, which is by jewelry, bars and coins, etc. But the gold ETFs have picked up quite strongly in the last couple of years, especially in the last 6 months. We have seen lesser redemptions and more net inflows. Gold mutual funds and digital gold also seems to be picking up, where you can buy gold for as less as 10 rupees and start building it up from there. So various ways of buying gold at this point in time. I also want to take you on what we've done in sense of gold prices and price rise. So for 2025 till time, we're up by 27%. Last year was 28% of gains, and in 2023, 15% of a jump is what gold prices gave you. Interestingly, it has to do with the central bank buying, which has been very, very supportive. If you look at global central bank buying, 1,082 tons was an all-time high buying. But in the last 2-3 years as well, as you can see, it has been above 1,000 tons as well. For 2025 till Feb, it has been 44 tons. But we do understand that 800 to 1,000 tons of central bank gold buying is what the street is anticipating for this year as well. So while there is support from central bank buying, investment buying, global trade tensions, markets do believe that while there could be a correction coming in for gold, but by the end of this year, you could be looking at gold prices yet again at all-time highs. The Indian markets, in the meanwhile, have seen ₹1 lakh for the gold prices and ₹1,03,000 for silver prices. This is without the GST. So we've seen much higher prices when you add GST and making charges to this as well. Let's talk about the final plate now, and this is about the gold price outlook. Well, most people believe that you wouldn't see the 40% kind of gains that we've seen in the last year in the next 1 on year as well. But having said that, it will keep up with the inflation. And if there are trade tensions continuing and inflation is high and you see more interest rate cuts coming in, then you could be looking at higher gold prices. Bank of America is still talking about an average of 33.50 in this year. Deutsche Bank talks about 3,700 by the end of this year, and ANZ talks about 3,600 as well. JP Morgan says that prices can surpass $4,000 an ounce as well on the higher side, so holdings are on the stronger side. BGS also talks about 4,000. John Paulson talks about 4,000 by the year 2027 or 28. So next 3 to 4 years, until the time the US president is Donald Trump, the markets believe that the gold prices will have a strong run.
That's a rather astounding correlation between the US leadership and the price of gold. Very interesting one. And Manisha also said, Prashant, that whatever you buy on Akshaya Tritiya, typically you never make a loss. What are you buying today?
Manisha will fund me.
Oh, really? I'll get it for you.
Thank you, Manisha, for that. And of course, we'll continue to shine the spotlight on gold. Not that it needs a spotlight, but it's shining all the way. We'll take a quick commercial break here. We'll come back with our special segment. It's the Economy Lata in conversation with the analyst at JP Morgan on how tariff wars will impact growth, currencies, and commodities.